Hello, fellow traders. Tis I, the Rumpled One, coming to you on Wednesday, December 21st. The year is 2022. Let's talk trading. Sticking to your plan, part 3. As always, these videos are for educational purposes only. Your results may differ from mine. And let's just put this back up on the chart. Risk management. Never lose more than you're willing to lose on any one particular trade. Now, we've been talking about sticking to the plan. And so let's just start taking a look at a few of the charts here. What do we mean by sticking to the plan? Well, if you're doing that open gap fill, that means when the price opens on Sunday/Monday, what you're going to do is you're going to fade the gap. And the thing is, you're not going to think about it. You're just going to fade the gap. Now, of course, if the spread is ridiculous, you might want to wait. But the thing is, you see the opportunity, you know what the trade is, you just take it. There's no real thought involved, like I said, other than if that gap is just too ridiculous, you don't want to take that chance. I mean, the gap could be more than your stop loss, so there's no chance. There's just no reason to enter the trade then. And as we can see, all but 2 gaps have filled on the chart. We've still got the Australian, New Zealand dollar, and then New Zealand dollar, Canadian dollar. They are the 2 that have not filled. Now, if you're going to trade the opening range for the week, what are you going to do? You are going to look for price to break out of the either the Monday high or the Monday low. And so today, right there at 21.20, it broke out of that Monday low, and you take the trade. There's no thought involved. You just do it. You stick to the plan, you take the trade. And so you write that down. Maybe you write down the numbers, or maybe you have them marked on the chart. And sometimes it's good to write them down, just on a scratch piece of paper, back of an envelope, a napkin. Doesn't matter what you write it on. But the thing is you write it, and what happens is, in your brain, you might remember it. So we might be looking at a different chart. Oh, by the way, we're coming up to the 00, so we got a 00 trade on the horizon. Should be interesting to see if it breaks out or not. So, and also the opening range for the month, you can see those numbers here too. And it's something you need to review every day, because if you start it somewhere along here, you might have forgotten about this number or this number. And you can write them down on a piece of paper. You can use indicators to show them, or you can use my notes indicator and type it in. There's many different ways to remind yourself. Now, this is just the showing a monthly chart with the year high, low, open. Just to give you some perspective, there might be no trade per se here, but you look at this chart just to see where price is in regards to the open, high, low of the current year in the midpoint. Maybe I should add the yearly pivot in here. Inside bar traders, whether you're on the daily time frame, or if you're even thinking about doing it inside bars on the 1 minute time frame. It's there for the taking. And 00 traders, if price comes down to 00, you short it. If it comes up to the 00, you take a long. And whichever time frame you want, you might want to use M1, M5, M30, H1, M15, H4. You decide which way to trade. But you can see, based on the candle colors, from the week all the way down to the minute, every candle was red at the double O. And this is just the range, or the dashboard. It's showing the range, high to close, close to low, close to open, high to open, open to low. Just some of the things like I like to call, like this, my GPS, so I know where the price is in reference to other positions. Now, high, open, open, low, these numbers only change when the high changes or the low changes. Whereas these three here, which is the same as these three here, they change pretty much with every tick. Every time it moves a pip, in this case a tick, but here, every time it moves, it registers. So if you took that double O trade and it turned around, you can see here, M1, M5, it turned. But you stick to your plan. And let's see, what was the low? So it actually went down to 96. So if you shorted that double O, you had a chance to make 2 or 3 pips. Now, buy zone traders right here, and weekly and daily open cross traders, you can see here where the signals were. Right here, you had a red at the line, red at the line, green at the line. Oh, came back the other way. Green at the line, red at the line. Not really that difficult, but once again, it might sound simple, but go long at the weekly open. If whatever candle color, maybe say daily candle color is green, I'm going long at the weekly open. If it's red, I'm going short at the weekly open. This stuff. The thing is, these are very simple things that I tell you guys and girls and non-binaries, but sometimes it's hard for traders to follow. The rat zone. Probably, let's see, at this time of day, we may have had enough separation to do a rat, but right here, over the past hour or so, you see we ran up and we came back down. Now we're running back up again. So you can see the double O was in the green rat zone. Now the price is pushing back up. What do? The rat zone, you just don't, enter willy-nilly. But what this is saying, this is telling you, look for shorts, look for longs. Now, of course, if price were to make a newer low and then a newer low and a newer low, you'd be going the other, price would be going against that. Now, something else just to think about. Smart Rat has now pushed past the change. So what this is telling me is I need to change the pip trigger back to 20 because obviously the price is moving. And so you can see here in the red rat, the smart rat's still even below. And what this is telling me is that the range between the high and the top of the candle has been getting bigger over the past, let's see, smart rat zone, edit that indicator, over the last 250 trading days. So this year, we know because of the range is the second biggest in what, 20 years, I think it was. The year-to-date accumulated range. So it's telling me right there, something's changed. So we will now go with the statistics. You know, it's funny, been working on indicators, which I will have to be sending out the final batch of the donationals soon. But what I think is really interesting is I realized I did something kind of dumb on the smart range. I put in a bunch of fixed ranges as opposed to doing it like I do in the frequency distribution, where you pick, you know, one variable that you're testing and then you pick the other variable. So I think I might have to rewrite it for 2023, because that's just, like I said, it was a dumb way to do it when I already have the technology to do it a smarter way. Pivot traders. You can use the pivot trading plan indicator if you want. You can write your own pivot trading plan. But the point is, you should know, before you start trading, if you're a pivot trader, one, do you want to trade away from the pivot, or do you want to trade towards the pivot? Now, once price opens, usually you want to trade towards the pivot. But once it passes the pivot, then do you want to trade away from it, or do you want to trade towards it? You have to decide. Write it down. And you see, we took out today's pivot. We opened above, came down, took it out nicely. Weekly, we opened below, got close. We got the 41.1. We only missed it by actually 0.7, less than a pip. Haggard trade. So one of the things when you're trading, if you're not going to be watching the trade, sticking to your plan, what you might want to do is account for spread, and maybe instead of trying to hit that, you say, well, maybe if I'm going long, maybe the ask hits it, but the bid doesn't. So maybe you'll say, okay, I'll take 3 pips less, or I'll take 2 pips less. But you don't want to miss it by a pip or 2. You really don't, because that'll just mess with your head. So it's just something to think about. Monthly, we haven't even come near it yet. See, we're back. We just went back down to the double O. Wick zone traders, same thing. If you're going to trade your wick zone, if price gets in the wick zone, it likes to leave it. You can see how many times it's done it today. You take the trade, you don't think about it, you stick to the plan, and you just move forward. Flip-flop box traders, or lower high, higher low. You can see right here, we went through a lower high all the way up to 12, came back down, hit the double O, basically filled in this imbalance, and let's see if it goes right back up. Rat traders, wick zone traders, holo traders, highest open, lowest open. Here's lowest open right here. Price came back up, so close to the double O. Once again, just stick to your plan. Lower high, higher low, flip-flop box, we've already gone over that. Fib traders, you can see it right here. Came and it did a nice retrace. And you see where it is here. Probably will get to the 23, maybe the 38, maybe it'll come back up to the 50. We'll have to wait and see. Walmart line traders, candle color at the line. Walmart's already shared his trading plan. Adopt it for your account, the way you like to trade it, and just go ahead and do it. So, fellow traders, you have to stick to your plan. If you don't, then you're just gambling, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.